Good afternoon, everyone. Today's Monday, April 1st, 2013, and the market's closed here. We had the S&P 500 down a little less than a half of a percentage point. You can see in the daily chart, absolutely zero damage to the longer-term uptrend. When we take a look at some closer action, we can see in the 30-minute time frame, these were the little lines that we had drawn in Friday, thinking or hoping that this level would hold as support. You can see that. Let's take a look at the 10-minute time frame. We did get down to the rising 5-day moving average, bounced off that initially, and then undercut it and still found support there once again. So it appears as though the 5-day moving average is being given some value in this market right now. But breaking below that, I think that we look at this market, it is getting extended. We've had a little bit of a time correction, you could argue, but we're up close to all-time highs, so it's very difficult to become bearish in this environment. Let's keep an eye on a trend line that looks something like this, and that'll kind of place a little bit more importance on today's low near what was today's low? I guess it was 155.67. I still think it wouldn't be a bad thing if we were to dip down a little further on the daily time frame and perhaps down to this level where we had seen some prior support at about 153 to 153 and a half, and that's where we have that 50-day moving average as well. So there's nothing indicating that that will happen. It's just something to be aware of, that we have the potential that maybe this is from a failed breakout here, failed exuberance after the new high, that we get a little bit of a move lower. So it's something to be aware of. We had 2,091 declining stocks today, just 882 advancers. So obviously, the average stock was down today, and we did close below that volume weighted average price, which acted as resistance really throughout the day as well. So just a little bit of short-term cautiousness in this market, but definitely not bearish at all. The Nasdaq broke just beyond that $69 level today, and again, it's not so much breaking beyond the level, but maintaining and holding above that. I was saying at the end of last week that I thought maybe a pullback down towards 68.50 would be a good scenario for this market to rebuild some strength and then be able to break out. You can see we have a trend line in here as well. So perhaps breaking down below this low for today of 68.31, we would see a test of that 50-day moving average in the recent lows. So just be aware of that. There's nothing bearish here, but maybe just a little bit more neutrality, and you have to listen to the message of each stock on an individual basis. You can't extrapolate that, well, the Nasdaq broke out and is starting to pull in a little bit, that means your stock that might be in a nice uptrend will do the same thing, because there's still a lot of good looking stocks. Ones like HOLX, which has a great looking weekly and monthly time frame. You can see here it's been kind of messing around or doing damage to this level in here. Probably not the best description, but doing some damage to this resistance in here and been a little bit choppy. But it seems as though maybe now the stock has actually broken out and could be held with a stop down near about $22.40. Let's take a look at the Russell 2000, because that's an important level in here that we saw today as well. We came down really to the highs of the February highs in there. In fact, let's take a look and see. These highs right here were 92.68. Today's low was 92.71. So it came within a couple pennies of the high back here in February, from which the biggest correction we've seen this year has emerged. We've got an important trend line here that was also touched, and we've got, of course, that 93 level. So 92.75 to 93 is our key area in here, and this is the level we had spoken about already. And I said that, we wanted to see it close above 93. We're still, you've got to be pretty cautious here on the Russell 2000. I think that, again, we've got a key this prior resistance held as intraday support. We've got this trend line in here that's the essence of trend since the beginning of the year that was pretty much touched today. But a little bit of, another break below today's low. I think that it would be a pretty good bet that we do head down towards this gap in here at about 91 and a quarter, and then you have that 50-day moving averages, which is about 91.58. So the Russell 2000, I think you have to be really cautious near term and say that we're going to need to see it close back above the 5-day moving average for us to become a little bit more enthusiastic about this market. Now it holds up, but it's extended, and it's arguably due for a pullback, but let's listen to the market and see if that is in fact what it tells us. I think that even a move below today's low with a stop right around 93.35, 93.40 might even be a good scenario for some more aggressive short traders out there. The semiconductors pulled back into their range. That is below that midpoint of the range that we had seen has been so important here throughout the last couple months. So the bigger picture is it's still range bound, and perhaps we're going to see a test of the lower end of the range. We do still have an advancing 50-day moving average, but it seems to be having trouble in here. We also spoke about maybe the potential that this is an inverted, this is a head and shoulders pattern, but the neckline I think is going to need some work before we could get really bearish, and that's down near about 34.40. So things seem to be maybe slowing down a bit. We're holding this trend line on the semiconductors from the low of the fourth quarter and turning more neutral, but definitely not bearish yet. We've got a lot of stocks that broke below some important support levels as well. That's something we're going to talk about in the Alpha Trends subscriber webinar this evening. And if you're not a subscriber, feel free to sign up for a free trial and check it out if you have time tonight. The financials, again, the bigger picture, they're headed, it looks towards that $20 level. And near term, we're talking about this 1795 to 1805 as being the key band of support that we want to see it hold above. There's nothing bearish going on in here. We held above that 1805 level, and we've got really a band of support which should be found down to 1795. And then we've got the 50-day moving average, which seems like a reasonable expectation if we do break below that 1805. So near term, I just say you got to be a little bit cautious in here. Listen to the stocks that you're in. We've got earnings coming up, so there's going to be a little bit of nervousness towards the earnings results coming up. But manage the risk of your individual stocks based on what your individual stocks are doing, not necessarily on what the overall broad market is doing. Thanks for tuning in.